Well, good morning, everyone. Welcome to our Wednesday morning trading session. My name is Eric Senft. I'm going to be your host here for the next hour and a half or so, depending what the markets are doing today. Maybe we'll hang out a little longer. For those of you new to our trading room, welcome. Just a real quick overview of what you're looking at. This is the diversified trading system, and it's diversified because we're looking at the market from three different points of view. Whereas with most trading systems, you try to always make that system fit whatever the market happens to be doing. With the DTS system, you have three different tools to take advantage of the different market environments. So here in the top left, we have the Hawk Scalper. Top right, Falcon Swing Trader. Bottom left, Eagle Trend Trader. And the bottom right, this is the latest addition to the DTS family. This is the Raptor, and the Raptor actually incorporates elements of all three birds into one trading system. And yes, you can change the bar color. People are always asking, do I have to have blue bars? No. Do I have to have pink bars? No. No, you can change the bar color. Regardless of the system you're using, the signals all develop the same way. First, you're going to get a warning dot along with an audio alert, and then when the signal is complete, the system produces a triangle and a hash mark. That means it's decision time. Now, you're going to see here throughout this morning that we don't necessarily go around taking every single signal. For instance, here on the Hawk Scalper, all these signals that produced on yellow bars, we pretty much ignore those. Even though, yes, this one finally did work out, you'll notice that some of these signals really didn't end up going anywhere. There's a yellow bar signal that failed. Here's a yellow bar signal that didn't have any follow through. But we do tend to concentrate on a signal like this one right here. This is what we call the first micro-macro crossover signal. And all that means is that the micro line, that's a thin one, crossed over the macro line. And this is the very first signal where everything is in sync. So we have green bars, green trend lines, green filter, and a green signal. A lot of the signals in the DTS system work that way, where we have a lot of confluence. So we're looking for things to come into sync. That would have been a signal for us to take. Unfortunately, I was still asleep at that time. So we'll see how the morning plays out here. The market just opened. It looks like it was a pretty soft open here on the Eagle. You can see that trading left off, well, pretty much where it began. It left off here around the 43.90 area. Very quiet through the Asian and the overnight session. That's kind of unusual. And then we're opening right here, pretty much where we left off. Maybe slightly lower. Not significantly so. Before I forget, I want to point out that your questions are most welcome. Sometimes if the market isn't doing anything, your questions help pass the time. You can ask questions about anything you like. I'll do my best to answer. Here on the Eagle Trend Trader, a slightly different setup. You're going to notice this band running through here. No, it's not an Ichimoku cloud. I know it looks like one. That wasn't intentional. Just worked out that way. Here too, we're looking a lot of times for confluence in the signal. So we have what we call a trend change signal right about here. Actually, that one didn't trip. The next one did. But again, everything is in sync. Right, we've got a bullish band, we've got a green signal, green warning dot and triangle hash mark, green filter. Most times that's what we're looking for, is we're looking for confluence. The Eagle, however, we also have this added signal called a red bar buy. You see the hard edge on the Eagle is very influential. We always expect a reaction when the market encounters the hard edge. And very often when it hits the hard edge, we'll produce a red bar buy signal. So the bar color is actually changed over to red, meaning that the bears are really starting to push now. But the buyers made a last-ditch effort. They came back, they produced a green dot and a buy signal, and that's actually a buy signal for us. So we'll see. The intention would be to retest the high. We'll see whether or not they can manage that this morning. Very quiet start to the day, to be sure. I didn't check my reports. Are we anticipating a report today, besides the crude inventory, I mean? While we're here on the Eagle, let me point out this little tool here in the top left corner. This is what we refer to as a system add-on. And the system add-on will work on any system. It doesn't have to be a DTS system. It can be a 5-minute chart. It can be a daily, won't work on a daily chart. But any intraday chart, this will work. It can be whatever, a tick chart, a Kagi chart. Won't work on a point and figure chart, but those are a different creature altogether. But I think you get my meaning. The trade forecaster tells you what the current trade environment should be and what the next one is most likely to be. So we're apparently in trend mode for about another 20 minutes, even though it looks like it's starting to wind down a little bit, after which time we're going to be moving into swing mode. So things are likely to liven up a little bit. Here is the Falcon swing trader. And with the Falcon, we pay a lot of attention to this trend line. If the trend line is red, we're pretty much looking for sell signals. If it's green, we're looking for buy signals. Here was a trend change signal right here. Notice the green hash mark and triangle. Where's the warning dot, you say? Well, the warning dot was there, but it did get absorbed when the signal printed. Sometimes it does that. Not to worry about it, though. But the trend line changed color, and we get this little characteristic up, down, up pattern. So the buyers take control. The sellers try to fight it back. The buyers won't let them. And now we have a signal where everything is in sync. So we have a green trend line, green filter, green bars, green signal. That's what we refer to as our trend change signal. And you can see we had some pretty decent follow through from there, at least enough to get to our high probability target right there. And then the market took a little stutter step. You're going to find this as well, that very often the market will hit our high probability targets, and then, well, sometimes it'll make a full-on reversal, but very often it will at least pause. Oh, before we leave the Falcon, let me point out these lines that you see here. This is another system add-on. This is the Ultimate Support and Resistance Suite. It is an assortment of 21 support and resistance lines forecast for today's trading. No, they are not Fibonacci levels, and no, they are not floor pivots. If they happen to coincide, that's more by coincidence. The gold line is the median line. That just tells you you're in the middle of your assortment. Above is the primary resistance, below is primary support. These three lines tend to set the tone of the day. If the market gets above the primary resistance, we tend to be bullish. If it gets below the primary support, we tend to be bearish. That was yesterday. Let me just scroll back here to yesterday real quick. So you can see the prices came down, bounced off of primary support, bounced off of the primary resistance, came down here, took a little bit of a delayed bounce off of the median line, but look, it came back with a trend change signal, broke the primary support, and then we were stuck between the secondary resistance and primary support for, what was that, about 20 minutes? And then we broke higher and just kept on going from one resistance level to the next. So that was yesterday. Once you get into those green zones, then the market's pretty much bullish. When you get into the pink zones, you're pretty much bearish. But right now, the median line is pretty much skewering the market, so we're fairly neutral, as we might expect. So that's the support and resistance suite. Again, that's an add-on that will work on any chart. Doesn't matter whether you're looking at a 15-minute chart or a, shoot, it's been so long since I used other chart styles, I don't even remember what's out there. Tick charts, volume charts, it doesn't matter. Whatever kind of chart. This now with the Raptor, I didn't go over the Raptor setup. The Raptor, as I said, is a blending, a hybrid, if you will, of the other three birds all into one. So it incorporates elements of the Hawk Scalper, the Falcon Swing Trader, and the Eagle Trend Trader all into one tool. This came about because we had a few traders who were trading off laptops or had limited screen real estate, and or were just more comfortable with a single trading system. And they said, hey, can you design one that's just a single system with the DTS birds? So the Raptor was the result of that. The whole Eagle Trend Trader is actually programmed down into this filter here in the bottom. You can see it borrows from the Eagle Trend Trader in that it has these clouds, although here on the Raptor we have a dual cloud. The bar colors, the way the colors print, that's from the Hawk, and some of the signal generation is also derived from the Falcon. This little nifty looking tool here in the top, this is also a system add-on. This is the Geiger counter, and the Geiger counter is essentially a tape reader. So you can see the time and sales flowing by, the buyers and the sellers, and right now you can see we're getting pretty bearish, a lot of selling activity going on, the market getting a little bit more excited now. I saw some pretty big orders going through here. So the Geiger counter is composed of this tape reader so that you can see the history. It also has this needle which will turn red when the market or the selling is especially strong, white when it's relatively neutral, and green when the buyers are a little bit stronger. And we have this dial. I find this dial particularly helpful, especially if I'm planning a trade or trying to decide whether I should stay in a trade. What I'm looking for from this dial, you're going to notice most time it's just whipping back and forth. It's because the buyers and sellers are taking turns trying to gain control of the market. But what I'm looking for when I'm watching this dial, trying to gauge whether to get in a trade or get out, is for the dial to pull over to one side and just hold and hold and hold. If it can do that for about 3 or 4 or 5 seconds, we should see the market react as a result. So we saw the buyers pull over there and hold it for a little while. Now the sellers are doing their thing. See, oh, they're holding, they're holding, they're holding. The longer they can hold it and keep control, the more likely it is we're going to see the market move in that direction. There is an exception, though. Sometimes you'll see, for instance, the sellers holding and holding and holding, and then the market won't react. It won't break these lows. Well, then you know that all that selling power has been absorbed by the buyers, and we're going to see the market move higher. So a couple little things there on the Geiger counter. And then we get the bid and the ask printing here as well. So pretty helpful little tool there for you. Still not really clear on what's going on here today. We did get a soft edge sell signal right here on the Raptor. Oh, these tools that you see here on the right, this one's called the Trailblazer. The trade manager, which I'll show you in a second, is very similar. And if we don't get a signal here shortly, I'm just going to take the next signal to show you how this works. There's an assortment of 16 different stop strategies here. Each one is fully customizable. This is what they look like. There are these blue dots, and like I said, you can customize them, you can change them. And what these do is, this is how the Trailblazer would manage your trade for you. So let's say you sold this soft edge sell signal right here on the Raptor, and you put your stop where the blue dot is. The Trailblazer would have managed your trade all the way down to here where you would eventually been stopped out. So it essentially gives you the ability to trade hands-free, if you will. You can set the trade, you can set your stops, and you can go do something else. You can look for another trade. And like I said, there's 16 different strategies here to choose from. Some more conservative, some more aggressive. Oh, I have a feeling we're going to be in a little bit of a sideways trading range today. All right, I'm going to turn off the stops for just a moment. So that's the Trailblazer. The Trade Manager is very similar in that it also has these stop strategies. They're also customizable. The big difference is the Trade Manager also has this risk component down here. What the risk component does is it limits your risk exposure. So regardless of where you place your stop, notice I put my stop there, I'm risking $400. Now don't freak out because this is based on my account. If it's, may seem more or less to you, but if I put a wider stop, notice the risk amount stays the same. So if I run a really tight stop, let me put it there. Oh shoot. There's a little bit of a rounding issue going on. Oh, all right, still $400. You notice the $400 doesn't change until I start getting a little bit too far away. Oh, rounding error. But what is changing is the number of trades I'm taking, the quantity. But it always controls my risk to 2% of my trading capital. That's a very important concept. All right, we're producing a first micro macro cross signal here. oh shoot, now we're into yellow bars, so that just voided. Oop, we got one more chance. Here comes a green bar sell. This is also one of our signals. And the market's chopping about, but you know what? I'm going to show you how this works. So we're going to take this signal. And right now I'm employing the swing strategy, so it's placed it above the last swing point. And what I'm doing is, you see, we're getting the warning dot. And this is what we call a green bar sell. And here, so you don't get confused, we don't chase, like I said, all these signals around. In fact, what we do is we're looking for high probability signals. So for the hawk, it's going to be signals like this, where we're looking for a first micro macro cross, or a macro pullback, or 4-arrow consolidation, or the post 4-arrow consolidation, or the red bar buy, or the green bar sell. These are the high probability signals that we're focusing on. The one I'm chasing right now is the green bar sell. Oop, come on, let me get that one. Okay, so what's going to happen now is once the order fills, our stop becomes active. I've got a break-even trigger in play. I've got a profit target in play. You can break these up as well. If you don't want to be all in, all out, you can set different targets, as many as 3 targets and a runner. Once the trade is live, you can adjust your profit targets or your break-evens as you will, whatever you want to do with it. Come on, get down there. Oh, very tight little sideways range. So what this is we're retesting the high. This is the green bar sell signal. Now we're looking for the sellers to recover the market and at least come down here and retest these lows. That's the objective. I perhaps went a little bit heavy considering that the market is so sideways today. Now, did you notice the trade manager automatically rolled my stop from up here to down here? Pretty cool, huh? Now I'm going to actually hold my stop back just a hair. I don't want the trade manager to roll it just yet. Or I could set the parameters a little different to keep my stop back a little. I can set the swing strength a little higher. Oh, we're doing some serious chopping. Well, the good news is I know the resistance here to the market is quite strong at 43.92. Let's take a look here at the support and resistance suite. No, we're still just kind of skewered by the median line. Spending a little time above, spending a little time below. No clean signal here on the Falcon yet. Notice everything is out of sync, filter is out of sync, trend line is out of sync, bars are out of sync. I'm also watching gold and crude oil this morning. Pretty quiet across the board though. I think there must be a meeting going on. Or we're waiting on a report. Hold on here. Oh, let me put this up so we can watch this. No, nothing really in the works. Okay. That maybe something was keeping this market quiet this morning. Turns out they're just happy with the NASDAQ somewhere around 43.88, 43.90. Yeah, Salish and Tony both reminding me crude inventory in about a half an hour's time. If crude continues to trade this sideways, here's crude oil now on the Falcon, we'll have a pretty decent range that we can bracket. In fact, I'd probably bracket the primary resistance and the primary support. Working a late filter entry signal here on the crude oil market. So the signal is already tripped, but the filter is out of sync. So I know if this current bar finishes on the low, it will bring the filter into sync. There it is. And now that becomes my signal bar. So there's a crude oil trade for you. I think I just heard the market hit it did too. It hit our profit target. Hooray for us. So there was a nice little swing trade that we could take advantage of. or pardon me, a scalp trade, not a swing trade. And a pretty decent setup considering how quiet everything is today. Here comes the Raptor. We can try this with the Raptor as well. We're getting another soft edge sell. This is going to be the problem right here. But hey, it's a demo room, so why don't we demo? Now the difference between the trade manager, how you saw me click down here and enter trades and what, the Trailblazer has been designed to be a one-click entry system. We had some of the owners trading some very fast markets, and they were complaining, oh man, by the time I click this, that, and the other thing, the market's already moved past my entry. So with the Trailblazer, you preset your quantity, you preset your profit targets, and then it's just a matter of hitting, we're getting a sell signal here. So you hit sell market. Oop, I need to enable a stop. And voila, you have your entry, you have your break even, you have your profit target, and you have your stop all active. So the only downside with this is that you don't have that risk component built in. So you need to know more or less what your average position size would be so that you don't overextend yourself. A good question here from Elmer. Elmer asks, do you have an alert window open somewhere on the screen that you show, or do you just look at the signals in the chart? Okay, what I'm going to do here, Elmer, is, in case anybody's wondering, I'm just going to roll my stop back above the high. I don't want it to roll in just yet. No, what I do is I've got the audio alerts turned off right now because for some reason, I guess you can hear the audio alerts, but whatever. I get the audio alert, and then that draws my attention to that particular market. So for instance, when I hear scalp, well, I'll look at my hawk scalper, and then I'll take a look and I may enlarge it and say, oh, okay, it's a green bar sell and we're retesting the highs. It looks like we're failing. I may try to short that. I may try to sell that green bar sell. Or if I hear, scalp and I look over and I see it's yellow bars, well then I pretty much ignore it because I know I don't want to take a yellow bar signal. Same thing when I hear swing, I'll go over and I'll see, oh, all right, well, it's looking like a trend change signal. Do I want to take that trade? If I do, well, then I can set up and I can take that trade. So no, I don't really have an alert window. I'm scanning the charts as they're unfolding, and I'm listening for the audio alerts, and then I'll go with that. So I hope that makes sense. Oh, here on the Raptor, we're just about to get, oh, sorry, I was going to show you how the, well, you can see how the trade flattens anyhow. So we're back up here at the 42.90 or 43.92 area. And things starting to, well, trying maybe to get a little bit more bullish. When the market gets sideways like this, I'm always a little reluctant because sometimes what the market will do is it will break out of the sideways range, make a short move higher, and then head the other way, essentially giving you a fake breakout. So it's a little bit difficult to gauge at this moment. Oh, way to go, Tony. Tony bagged 20 ticks on the Falcon in soybeans. You're starting to like those soybean trades, aren't you? Oh yes, JP wants to see a crude chart. Let me get the crude charts ready. Oh, well, we just finished our Falcon crude trade, and this is going to answer Craig's question as well. Craig's asking, well, you can't see the P&L. You can, Craig. I have a tendency to turn it off because I find it distracting. But here's the crude oil on the Falcon. And this was that late filter entry signal trade that we took, the one that I pointed out to you just a moment ago. So the late filter entry signal, again, with the Falcon, we're paying attention to our trend line. So the trend line changes color. Now we're bearish. The market retreats here into the trend line. Pardon me. The filter goes out of sync, but we've produced a signal. We need to wait for the filter to come back into sync, and then it's okay to short. That's actually a high probability signal for us. And you can see it drifted down here, hit our swing target. We had a trend change signal right here in crude oil. Again, the trend line changing color. And as I pointed out earlier, we get this little characteristic up, down, up pattern. That tells us it's time to buy the market. So the buyers force the trend line color to change. The sellers try to get it back, and then the buyers say, oh, no, you don't. And then they come back, and we end up buying right there. So if we bought there, that would have been a nice little swing also. You can see in this case, the market went much further. Not much further, a little bit further. Would have been okay if you could afford more than one contract to throw a runner in there, perhaps try to capture a little bit more of that profit. So now that we've hit our high probability target and we're sitting here near the primary support, we might anticipate some sort of reaction. Oh, way to go, Andrew. Andrew took 20 ticks on that crude oil trade. Well done. You guys are knocking it out of the park. Yeah, Tony took a 20-tick Falcon trade in soybeans. Oh, sorry, let me show you. I only showed you the Falcon on crude oil. Let me show you the Hawk scalper. Should show you the whole assortment. First micro-macro cross signal right here. So the micro line, thin one, crosses the macro line. First signal where everything is in sync. Now, normally the first micro-macro cross develops a little bit earlier, but whatever, the market conditions weren't right. The signal drifted a little bit. I should point out that there are about a half a dozen parameters working behind the scenes here that need to be met before we even get a warning dot to print. All right, so you shouldn't think that this is just simply a moving average crossover system. No, it's not. There is a lot of stuff working here behind the scenes that you don't see. And the whole system has been stripped down partly to make it more appealing, a little bit more eye candy, but primarily to make it easy to interpret. Right? If you had to try to figure out all those things that are being analyzed, and they're not all indicators. The tools are analyzing momentum. They're actually analyzing price. The Hawk in particular does have a price component built into it because, of course, it's a scalping tool. It's trying to pick up on those little minute differences that happen in price when a scalp trade is about to trigger. But we have a first micro-macro cross, and we also have a 4-arrow consolidation. And we have a macro pullback, so we have 3 signals all ganging up into one before that signal finally prints and the market heads lower. So no problem here hitting our high probability scalp target. And here on the Hawk scalper, I would have actually had the ability maybe to break this up, maybe take half my profit on target and leave the other half on as a runner. So you see what the trade manager does. is I've got half my profit here, and automatically it defaults the other half to the runner. So I've got two contracts. I take profit on one, and the other one is now in running mode. And if I were using, say, let's say I'm using parabolics, this is where my stop would be, where that blue dot is at. Well, actually, it would be at break even. Oh, no, sorry, it would be a little bit further. It would be right there. All right, so that's the Hawk Scalper. And now here is the Eagle Trend Trader for crude oil. Yeah, we got this nice move here in the overnight, but in all honesty, that would have been very difficult to take. It is a red bar buy. Yeah, I don't think I would have been. The band was already bearish. I'm not so sure I would have been interested in a buy at that point. See how the band already flipped over? I might have been looking for a rejection and the market to actually continue lower from there. But at any rate, there was a little bit of a move up. You see, this is why we have three tools. The Eagle didn't give you a very good signal, but you saw that the Hawk and the Falcon both gave very nice signals in the overnight. And now here we are with the Eagle this morning. Again, not a real clean signal. Nothing that I can take as far as the Eagle goes. If we get a retracement back here into the hard edge, however, and we produce a signal, that would be interesting. Especially if it were, say, a green bar sell signal. Let me show you what one of those are like. They're the opposite of the red bar buy. Here's the red bar buy. Remember I told you when we hit the hard edge of the band, we anticipate a reaction. Well, if the bars happen to turn red and then come out and produce a buy signal, that's actually a pretty strong signal. And the market rallies up from there. When the market is in a downtrend, the opposite signal is true. Oh, darn, they didn't give me one. The market will drift, it will produce green bars, and it will produce a sell signal. I was hoping I could show you one. Here we go. Here's a couple, actually. So here's a green bar sell signal. Notice we go into the hard edge. The bar color has changed. The sellers make one last ditch effort to take control of the market. So they throw everything they got at the bulls. That's the green bar sell. And it tends to be a pretty high probability signal. At least high enough probability to find our profit objective. So there's the signal, cover it up there, and boom, down she goes. All right, so there's the Eagle Trend Trader on crude oil. We're still stuck. Gold also kind of quiet this morning. And yeah, we're just kind of waffling. All right, well, like I said, it's demo day. I'll demo something if we don't get a decent signal showing up, just to show you how the tools work. But in the trading room, we do try to focus on the high probability signals. Speaking of high probability signals, we're getting another first micro-macro cross signal here. So there's the first micro macro cross. We're just getting the warning dot. Well, actually, I suppose technically this is the first micro macro cross. Sorry. So the micro line and macro lines have crossed. First signal where everything is in sync. I'd probably set it up like that. And oh, we kissed the profit objective. We would be out at break even right now. Oh, now we're working on a possible macro pullback. I'm not getting into yellow bars because I'm not liking all this sideways trading that we're seeing today. Come on, get into yellow bars. Don't you dare give me a signal here because I don't want to buy you right now. People often ask why I watch the NASDAQ. The NQ, I feel, gives you a little bit more value for your money. It's $5 a tick, but the moves can be very pronounced, and it tends to shadow the E-mini anyway. And what I'll do is I'll pull up an E-mini chart. I'm sure there's more than a few E-mini traders here, or more than one E-mini trader. Come on, get down into yellow bars. You see the macro pullback signal. The occurs when the micro line, that's the thin one, goes out of sync, but everything else stays in sync. Very important. So right now we've got the warning dot. Oh, good. There we go. We're into yellow bars, so I don't need to worry about it. All right, what I wanted to show you, though, what a lot of people don't realize is that when you compare the E-mini and the NQ, you're going to find that a lot of times, dollar amount wise, you're probably going to do just as well trading the NASDAQ as you will the E-mini. Oh, here, let's do it like this. So let's say this recent move. So from the open, the high of the morning to the low of the morning right now is $275 on the E-mini. And here on the NASDAQ on the Hawk, the high of the morning, they're a little bit different, I know. So the high of the morning to the low of the morning, the high of the morning to the low of the morning is $205. Okay, so the E-mini worth another $70, $60 or $70. But the point is, at half of the value, at $5 a tick, there's a lot of times where you could take 2 contracts, sometimes even 3, depending how the trade is lining up, for every single E-mini contract. The point I'm trying to make is it's a lot easier to manage 2 or 3 contracts than it is to manage a single contract, right? Like let's say we're in this first micro macro cross trade right here. And let's say we set it up and we did it like this. So we have 3 contracts. We have options. We can be all in, all out. We can perhaps cancel the profit target and say, okay, I think the market's going to go much further. I'm only going to take profit on 1 contract here. Or we can even preset it. Let's say we're going to have 3 targets. We're going to take first profit, second profit, we're going to take at, say, 20 ticks, and third contract we're going to leave on as a runner. So here's our trade. Where did I risk it? Down to there. So we have options, right? We can take profit on target 1, profit on target 2, and then leave, profit on target 2, and then leave a third one in as a runner in case the market ends up going much higher still. If I were trading the E-mini with this exact same trade, I would only be able to afford 1 contract. So then the question becomes, well, what do I do? Do I take profit? Do I go all in, all out? Do I leave it in as a runner and try to run it out higher? What do I do? So that's why I've always liked the NASDAQ. Oh, here we're getting another first micro-macro cross. Sorry, I just missed that signal while I was showing this, but we'll throw it on like so. There, we'll demo it now. But with the E-mini, you don't have that option, right? And anybody who's ever tried to manage a single contract knows how difficult it can be. What a pain it is to try to decide, do I hang in? Do I roll stops? Do I take profit? Do I leave it on as a runner? What do I do? Okay, so we're going to go with the swing strategy here at the moment. Again, not a real fun day this morning. They're trading their effort. 1, 2, 3. Okay, all right, last chance for the bulls now. We saw them push higher here. That's once. Pushing higher here. So like this. There's rally number 1. This kind of rally number 2. Now we're working on rally number 3. If we don't get some traction here, the buyers are going to run out of steam. And we're going to see a reversal. So they may try to get into yesterday's highs. That's at 4,400. And again, this is, like I say, it's a demo room here this morning. In the trading room, I'll show you stuff, but we do try to concentrate on the higher probability signals, even if that means sitting around for a half an hour and not taking a trade, or however long it takes. So actually, you know what I'm going to do? We're going to delete the profit target and the break-even trigger. On the off chance that this actually gets a little bit of traction, I want to show you how the trade manager is going to roll the stops, and I'll go to a more aggressive stop strategy, maybe something like the parabolics. But I would like to try to let it get up here just a little before I roll to the parabolics because they're a little bit tight. right, just kind of nursing this trade along. Come on, get up there. Oh, we got about another 20 minutes, or sorry, we're 20 after the hour. We're getting pretty close to crude inventory. Give me an opportunity to show you how the OCO function works. What we're going to do is I'm going to turn that off. I'm going to leave my stop just below that little swing low. Sometimes the biggest challenge in trading is hanging in there long enough to realize a profit. Okay, I'm going to use the Falcon here. You can use any tool you like, whether it be the Hawk or the Raptor or the Eagle. Now, a lot of times what I like to do going into crude inventory is if the market is in a little bit of a congestion, I like to use the OCO function, and I like to bracket the market and buy above and sell a breakout below. These orders, by the way, when you use the OCO function, these are live the moment you put them on your chart. But this morning, I'm not entirely sure what to expect. We don't have a decent range that I can bracket. Where's the next support line? Maybe what I'll do for the sake of the room is we'll bracket it like this. We'll go above this little swing high. I'll use the secondary support to bracket the low, or I could even bracket the overnight low, I suppose. Why don't we do that? Here, we'll bracket the overnight low and this morning's little itty-bitty swing high. We're almost trading in the middle of that range. I'm going to enable a stop, but I'm going to try to make it a little bit looser. Okay, so I've got a stop in play. And I've got my OCO function, so what's going to happen is the market's going to engage the OCO. It's going to cancel the other trade. That's what OCO stands for. One cancels other. And Andrew is asking, how do you put a stop? Well, you see these blue dots here? The trade manager is automatically going to give me a stop according to the stop strategy. So if the market should fall, I'm automatically going to get a stop right here. If the market should rally, as soon as prices trade through these blue dots, you see what happens? The market trades through the blue dots, they flip over to the other side. So that's what will happen. If the market rallies, it will trade through the blue dots, the stop will flip down here somewhere, and then I'll get a stop strategy printing over here. Again, this is, you know, it's meant to protect you. It's meant to make sure that you're in a trade, you have a stop. Now, very often when the market is not giving me a nice sideways range, like I usually like to see going into the inventory report, there's another strategy you can use. This is one that a friend of mine uses. He actually lets the crude inventory report hit the floor, and he'll wait the first 30 seconds or minute. He'll let all the dust settle, if you will. Let that initial frenzy pass. And then he'll bracket the market. He'll bracket the high and low after the inventory report. and let the market break out and trade accordingly. But this is, again, more to demonstrate the OCO function, to see how that works. Let's just take a quick peek at our... Okay, so we did hit our high probability target here on the hawk trade, but I told you I wanted to show you how the stop strategies work. So I'm going to enable the parabolics now. Now watch how Trade Manager is going to take my stop and start rolling it. So I'm at this last dot with the parabolics. If the market continues higher, we're going to see it roll those stops up. But we did hit our high probability target. So, okay, did you see that? It just rolled our stop from here to here. What a choppy looking range. Okay, so I'm going to leave that one alone. We'll just let that one do its thing. And we'll concentrate here on the crude oil market. Look at how steady they are. Let me put a Geiger counter on here so you can see the order flow. So right now they're a little quiet. Oh, not bad. We're getting some decent spread on the bid and ask. But when they light it up, well, presuming they're going to light it up, crude oil hasn't been quite as aggressive as it used to be. By the way, if you're mirroring the NASDAQ trade, you may want to get more aggressive with your stops. As we get closer to yesterday's highs near 4,400, we're likely to see a little bit of a reaction. Okay, we've got about a minute to go before the crude inventory report, and notice here how quiet everything is. Like we're looking at single digits on the bid and ask. No, we're getting a little bit of buying pressure going on there. Somebody trying to get ahead of the curve. Well, there's some more buying. See how it's pulling over and holding, or was pulling over and holding? All right, crude inventory should be coming out any moment now. We'll see this Geiger counter get a little bit nutso, and then prices probably following suit. Okay, you see the bid and ask starting to get a little bit higher. Saw 60 on the buy and sell there compared to the 5 or 10. Okay, now they're starting to wind it up a little bit. Come on. Oh, there we go. Okay, now we got filled to the upside, and then notice how the trade manager brought the stops in so quick. Whoa, monster spike. We took some serious slippage on that. We hit the break-even trigger. That's why the stop is up here instead of down here. I should have disabled the break-even trigger, but we caught a little bit of a lucky break. Price is not looking back too far. Seeing a little bit of a reaction now here at the secondary resistance at the 45.06 line. You can use these as profit objectives also. Normally, when the market breaks a primary resistance or primary support, we anticipate the market to move two zones, at least two zones. So here's zone number one. This would be zone number two if you wanted. You could set an order to get out if the market rallies there, or you can just try to rally it up higher still. In fact, I can show you the stop strategies on this one as well. We'll go to the parabolics now, which are more aggressive. We'll protect a little bit more of our open profit. And Craig was asking about seeing the open profit. You can watch the profit tick by if you like. I'm a little bit distracted by that. That's why I usually turn it off. We have one more stop strategy, which is a little bit more aggressive still. It's the bar high low. This will take you out on the first sign of weakness, especially if you set it up, say, with a 2 and 2 parameter. It's not going to give the market a whole lot of wiggle room. So we've broken now the secondary resistance line, and we've got our stops in relatively tight. We'll see this. We're really just giving it this bar, this current bar. If it fails on this bar, well, then we're out. And if the buyers can recover before it gets to the resistance line, way to go, Andrew. Andrew bagging 50 ticks on crude. Nicely done. You're having a good morning. Way to go. That's got to put a smile on your face. Up $700 on crude. Yeah, Tony says he had a tighter buy in crude than I did, but got stopped out in the spike. But it's still up 574 on sim. But hey, you know what? If you can do it in sim, you can do it in real money. All right, so crude oil putting in a nice little rally now. I took profit at the secondary resistance line. Looks like we might have been able to run it out, but hey, that was still a good move. Nothing wrong with that. All right, let's go now to the NASDAQ trade. And, oh, it looks like the market reversed on us and stopped us out here. Came back with a red bar buy signal. That's one of our high probability signals. Again, this one is a last ditch effort on the part of the buyers to recover the trend. Sellers are forcing the market down, and then the buyers come in and try to rally it up. I usually go all in, all out on target. Occasionally you end up missing a bit of a runner, but more often than not, you'll do just as well going all in, all out as you will trying to put a runner in play. Look at our crude oil trade where we've gone up two zones now, and now it's flinching, right? So now if we have a runner in play, well, we're likely going to get stopped, and we're going to get stopped somewhere down here, and yet by taking the profit where I did, I was able to maximize my profit. That's my opinion anyway. I think the smaller your account, the better off you're going to be going all in, all out. Tony says he's been shy on crude oil. It's been so iffy lately. Tony, I've been shy on crude oil for 20 years. It is a wicked market, or it can be a wicked market. Yeah, Andrew says he's starting to agree with the all-in, all-out strategy. And like I say, occasionally, yes, you'll miss a big move. Like yesterday was a better trending day, and had I taken my signal, my trend change signal, put my stops here, I get stopped out, I take my $200, and the market probably goes another 200 before the end of the session. It happens. It's not the end of the world. But when you get days like today, the market's waffling a little bit more. I take my trend change signal or my red bar buy, I get my $200. I'm happy to have it, right? Because the market's just moving so slowly. It's just kind of dragging the whole way. They're going up, sure, but it's almost like they're very reluctant doing so. And besides, there's always another chance to get in. If you manage to bag a nice little $200 move on a trade, pat yourself on the back. Andrew says, but when you're scalping for 5 to 10 ticks, you want it all, otherwise you get 5 and you give 8 back. Yes, that's true. That's why we have our high probability targets, so that, like you said, if you're scalping, say, for 10 ticks, and the market goes up a little ways, and then all of a sudden starts to reverse against you, yeah, you can easily give, 10 ticks away. But in most cases, when you're scalping, the market will give you your high probability target. I also run a break-even trigger, and I normally set that at about anywhere from 75 to 80% of my profit objective. So if I'm running a scalping trade and I'm looking to scalp 10 ticks, if the market gets 8 ticks to my target, I'll roll the trade to break even. If it works out, great. If it doesn't work out, well, then it doesn't work out. At least I'm out at break even. All right, the Raptor giving me a soft edge sell signal right here. Now I'm going to punch into this one. I'm a little bit late on the signal. The soft edge sell occurs. Let me get back to the swing trade. There we go. Soft edge sell occurs when we've retested the highs and then we're getting a failure signal. So what we're looking for now is a retracement back here to the hard edge. I'm in here a little bit early, and yes, the market is in an uptrend today, so this is very much a counter trend signal. But we'll see if we can't catch a little bit of a move lower here. The tip-off for the soft edge sell, it must always, always, always be preceded by a retest, a test of the extreme, in this case the extreme being the high, and a failure. The failure being the market's inability to recapture the highs. This sets us up for a retracement. Usually we're looking to the hard edge of the band. Sometimes it will go a lot lower. And you can see I've got my break-even trigger in play. I'm starting with a more conservative stop strategy with the swing high strategy. Okay, so we've hit the break-even trigger. You saw the Trailblazer take my stop from up here, roll it to break-even +1, which is what I have it preset at. Come on, get down there. Tag it. Okay, so we've taken profit on one of our contracts. Now the other one is in as a runner, and we're in a break-even trade. So let's see whether we can't. There's going to be a little reaction here now to the hard edge, which is why I'm leaving my stop at break-even. And maybe, just maybe, we can ride out that swing and see the market try to trade a little bit lower, maybe get back down here. Where's my next support line? Back down here to the median line around 43.85 half, 43.86. I could see that. Working now a trend change signal here on the Falcon at the same time. Notice the trend line changed color from green to red. We've got the down portion, currently working on the up portion. Need to come back with that down portion and the sell signal. And that would be a trend change signal. Back to the action here on the Raptor. And break even may prove to be a little too cozy, but I'm okay with it. If I still had nerves of steel, I'd leave my stop up here. Let the swing ride out and look for the next leg lower. But we're playing with their dime now, with the market's dime. We've bagged profit on one. Now we're going to try to sneak a little bit more. Come on. Come on. Here, we're going to help it along. Sometimes it helps to pull it down with your mouse. Or if you tap the top of your monitor, sometimes that will shake it down also. Okay, this is a big deal now. We're sitting on the hard edge, which was our profit objective. $43.92, also the high of the opening range. You may want to keep that number in mind, 43.92, likely to be an important number tomorrow as well. Tony Tony says he just knocked his monitor to the floor. You're hitting it a little bit too hard, Tony. Yeah, if we can just see it hold here at 43.95. They're trying hard. If we can get this bar to finish lower, we're going to see the market tail off here a little bit. 43.86, well within reach. And maybe, just maybe, even a move down here to the low of the morning, around the 43.82 area. But this current bar, what a tug of war. Good question here from Elmer. Elmer asks, I guess this is in demo, but in reality, do you have the three birds linked to three different accounts so that you do trades in all directions, or does the broker allow you to run this on one account? Excellent question. If you are planning on taking trades against each other, so in other words, if you're planning to go long on the NASDAQ Eagle and short on the NASDAQ Hawk, you will need to open up three different accounts. One for the Hawk, one for the Falcon, one for the Eagle. Because if you're trading on one account and you go long on the Eagle and short on the Hawk, and both on the NASDAQ, you're inadvertently going to offset your position. In futures, we're trading contracts. So it's not like you're buying shares of Apple and selling shares of IBM or, whatever. Bad example. But we're contracting. So if you contract to buy the NASDAQ using one tool and then sell the NASDAQ using another tool, and you do it on the same account, well, you've just offset your position. What I typically do is I typically only trade in one direction, and I usually only take one trade at a time. So if I'm already short on the Raptor, here I'm getting a first micro macro cross in the Hawk, I can short the first micro macro cross in the Hawk, but I'm going the same direction, right? So it's a non-issue. But usually in practice, what I do is if I'm in one trade, I'll just stay with that one trade. Unless things look really, really promising, in which case I may choose to add another position. But typically what I'll do is, like I said, if I'm in a trade, I'm not going to look to go opposite. At the very least, not go opposite. An easy way to avoid that as well, by the way, if you're ever afraid of offsetting your position, I used to do this early on with DTS. I haven't done it so much in the last couple of years. But I would say put the NASDAQ on the Hawk. I would put the mini Dow on the Falcon. I'd put the Russell on, or the E-mini on the Eagle. So I would have a different instrument, and even though they're different markets, they do have a tendency to move together. So that's another thing you can do. All right, notice our bar is getting quite fat here now. These, I forgot to mention this is another add-on. This is the dynamic equivolume bars from Indicator Warehouse. Equivolume, if you're unfamiliar with the term, shows you the volume on the bar by making higher volume bars wider and lower volume bars narrower. So you get a quick visual feedback of how much volume is on the bar. What makes the Indicator Warehouse equivolume bars different from other equivolume bars is they will work on any chart style. Normally, equivolume charts only work on candlestick charts, but these work on the indicator warehouse mean Renko bars. They'll work on regular Renko bars. They'll work on range bars. They'll work on tick bars. Any chart style you want. Okay, how are we doing here? Okay, I'm going to switch now to the parabolic mode because we're starting to get a little traction. Parabolic's very good at protecting profit. You see, when the market starts to slow, the parabolics tend to come in a little quicker. Again, I could just set a target here at 43.85 or 86 and grab the rest of my profit there. Oh, know what? I'm going to let the parabolics show you how this works. I think this is the best feature of Trade Manager and Trailblazer. The ability to roll these stops, and this frees you up now, to do something else, to go around and say, oh, what's going on in gold? What's going on in crude? And not worry about your trade. There is a lot of programming in this. When Adam first told me what he wanted to do, have an automated stop system, I didn't think it was possible. But he got it done. Hats off to him. And the fellow who does the programming here, some of you will have heard me mention this before, he programs missile guidance systems for the U.S. military. So you know this programming is tight. You know this programming works. Yes, he's an exceptional programmer. Very heads up. Very smart man. And he loves to trade. All right, so we're seeing a little bit of follow through now. 43.86, kind of my objective. That's where the median line was at. But we'll let the parabolics run this one out. If we get a lot of open profit here without a reaction, I may even get more aggressive and switch to the bar high-low strategy. And, maybe keep things really cozy. I hate giving up open profit. What do we got now? We've got 25 locked in on the stop, but we have $140, $150 if I punch out right now. Plus the 100 that we already banked. So hey, we're going to have a four-figure day here today between the earlier scalp trades that we took, that huge crude oil trade. That was a real money maker today. And trying to nurse this Raptor trade a little bit lower. We could have a pretty decent session. All right, you guys, we're going to close up the trading room here in a few moments. If you have any questions, please type away. Otherwise, we're going to button things up. If you are going to continue trading this morning and through the afternoon session, I think we're in a bit of a trading range kind of day. It's a pretty big range, to be sure. It extends from around this 43.81 area all the way up here to 44.03, 44.04. Until the market gets through the lows of the morning, I don't think it's got a lot of room to move to the downside. Once it does get through the lows of the morning, shoot, we could fall all the way back to yesterday's lows, which were, around 43.50? So the market does have downside potential. But it does also seem to be laboring today. So I would not get too excited. But I would certainly reject any attempt to rally above 44.03. Feel free to sell. All right, no questions? Okay, well, thank you very much for your attendance today. I hope that it was at least a little bit informative. DTS owners, I will see you in the trading room again tomorrow morning, and we'll talk to you then. Bye for now.